Last but not least is a sideways trend. In this lesson, we'll talk about the unique condition in the markets, which is a sideways trend, otherwise known as ranging. In a sideways trend, supply and demand are relatively balanced, and therefore price is contained within a range. This range represents a period of consolidation and could be a wide range or it could be a tight range. Ranging markets, which would resemble a base in a candlestick formation, tend to expand and contract, but may not contain any breakout segments like you would have with an uptrend or a downtrend. With a sideways trend, we see relatively equal highs and equal lows remaining within a range. Within any ranging market, we look to trade at the extremes of that range. So with that, we look to sell near the highs and we look to buy near the lows. For sideways trends, we'll apply the exact same science and technique as we did with uptrends and with downtrends, which is to look at the three most recent segments. While we need three segments to define a trend as sideways, it could have more if it's been ranging for quite some time. It begins with either an up or a down segment, followed by a segment in the opposite direction that does not break out. Finally, a third segment that is likewise contained. Now, there can be expanding ranges, which is a bit more of an advanced trend market condition, but just know that it does exist. Typically, however, the ranges would be contained within one another. Now, here's an example of a sideways trend. Starting at the far right and working away from current price, we've drawn a box that represents the most recent segment, which was a down segment, a red box. Backing up from that to the lowest preceding point, we see we have an up segment or a green box. And then finally, what precedes that is another red box from a high to a low. All in all, we have a sideways ranging market. In other words, as the market continues to move from left to right, the left segment, the red box, engulfs the middle segment, the green box. The middle box engulfs the far right segment, the red box. This shows us a consolidation is occurring. In a sense, you can think of the colored boxes within this range as similar to basing candles in a candlestick formation. And basically, it is all representing a period of consolidation. And that's pretty much it. You've learned about sideways trends, which wraps up the definition of each trend. In the coming lessons, we'll talk about strategy and what we do once we have identified the trend. Before you move on, review and memorize the terminology associated with a sideways trend. Go to any chart in your preferred trading platform and identify when a sideways trend has begun. Using that same example, see if you can identify any controlling swing lows or controlling swing highs of a sideways trend. Hope to see you in the next video.